Banks are in a freefall. We've seen some of the biggest losses in the banking sector since the great financial crisis in 2008. And that begs the question, is there money to be made there? Can we scoop up some cheap stocks? The answer is, sort of. Let's take a look at the banking sector right now. As we can see, the situation is not looking very bright. Since the start of March, the Dow Jones US Bank Index has dropped by 20%. Plus, today we had news that the European Central Bank raised rates by 0.5%, which is slightly worrying. The bank system is extremely fragile, not just in the US. For example, Credit Suisse was having problems for probably the 10th time in the last decade, and the Swiss National Bank agreed to give Credit Suisse a 54 billion loan. I'm not going to go into detail, but Credit Suisse is a major bank. If they were not this big, they would have probably gone bankrupt 15 years ago, but they're simply too big to fail, and governments and central banks won't let them. Their share price has still gone down by 97% since their peak in April 2007. Basically, the situation is absolutely dire. A lot of bank stocks, asset managers, insurance companies, real estate investment trusts, and so on have gone down. Naturally, some investors are wondering if this is the right time to step in and buy some undervalued stocks. That's a good question, you know. Warren Buffett likes to say that you need to be greedy when others are fearful, and right now a lot of investors are really freaking out. Let's just take a look at this list that I've compiled of the 20 top banks in the US, along with a couple of the problematic banks. The majority of banks are trading below their 10, 50, 100 and 200 day averages. A few banks stand relatively strong. The bank with the best price relative to its 200 day simple average is HSBC. Weirdly enough, they bought Silicon Valley Bank's UK operations, so I am a bit surprised about that. Other banks include NatWest Group, also a primarily UK bank, so that makes sense, but also JP Morgan, Lloyds, Wells Fargo, Citigroup, and so on. The rest of them, however, have taken massive stock price losses. Obviously, the worst performers are the collapsing banks: First Republic, Silicon Valley Bank, Signature Bank, but also Credit Suisse. Probably because of what I just mentioned. Other banks have also taken big hits though, like KeyCorp, First Horizon, Truist Financial Corporation, Fifth Third Bancorp, basically the regional banks. Because of their price drop, a lot of these banks now appear to have incredible valuations and amazing dividend yields, so naturally, some investors will get tempted. The question I want to answer is this: is it worth jumping into banking stocks right now? I want to make it clear that I am not a financial advisor, and this is purely my opinion. However, right now I would avoid these banks and sit on the sidelines. They may look attractive right now, but the reality is that we are still in the middle of this. This has not finished. The banks are not out of the woods yet. The Federal Reserve has set up a facility to bail them out, that's true. However, like I mentioned in my previous video, a lot of these banks are way more fragile than they appear. Wells Fargo is raising capital to improve its liquidity, and, like I mentioned at the start of the video, Credit Suisse just landed a $54 billion loan. The situation with Credit Suisse really is the biggest red flag right now. The problem there is that they are massive, truly massive. They are the definition of a bank that is too big to fail, but at the same time they have so much exposure that if something happens to them, nobody can bail them out. Credit Suisse had $574 billion in assets at the end of 2022, and its asset management arm supervised another $1.7 trillion. Those are massive numbers, and the combined total is roughly 11 times the size of Silicon Valley Bank. The implosion of Credit Suisse collapsing can set back the banking industry a few decades and cause a worldwide depression. No bank collapses in isolation, as we saw just last week, and Credit Suisse is too involved in the financial markets to not bring down anyone else. Basically, guys, what I'm trying to say here is that banking stocks are under a lot of stress right now. The potential reward does not really justify the risks in my eyes. If I was pressed to select my favorites, I would probably go for banks like JP Morgan, Bank of America, maybe Citigroup. I think that they have a much better liquidity position than the rest, and they have been seeing massive inflows from depositors moving their money to the safety of the big banks. Still, at the end of the day, I really don't want to get involved in any of this. I will admit, I opened a £100 position in JP Morgan so that I can follow the situation a bit more closely. But I don't think we have seen the end of this, and I think there is a very good chance that the next couple of weeks will get worse. To end things on a positive note, Michael Burry released a tweet yesterday suggesting that we may see a light at the end of the tunnel in about 2 or 3 weeks' time. Do you think that we are about to see a market bottom? Let me know in the comments below. If you enjoyed the video, leave a like, share the video, and I will talk to you again soon. Stay safe, guys.